Hello, and welcome to our ongoing educational webinar series. I'm Liz Revenko, financial planner at Mosaic Financial Partners. Mosaic is a fee-only, independent financial planning and investment advisory firm with locations in San Francisco and Lafayette. We're here to talk to you today about tips, tools, and techniques for property and casualty insurance. With me here today is Jill Federico. Jill is Vice President at MOC Insurance. She has over 14 years of experience in the property and casualty insurance industry, and MOC is one of the largest independent insurance brokers in California. So property and casualty insurance has three major types: auto insurance, homeowners insurance, and umbrella insurance. We'll be covering all three of them today. We're going to go through, for each of them, what it is, why you need it, how much you need. We're going to talk about some recommended features beyond the basics. We'll also be sprinkling in some stories about claim examples, which will be entertaining and also help you better understand what insurance can provide. And at the end, I'm going to put Jill in the hot seat for a game I like to call, What Insurance Would I Wish I Had If One of These Modern Day Events Happens to Me? So let's get started with the first of our three property and casualty insurance topics, auto insurance. Jill, what are the key components of all auto insurance policies?
Well, really there's three components. One is the liability coverage. The second would be the comprehensive and collision coverage. And the third would be the uninsured, underinsured motorist coverage.
So starting with the first one, auto liability coverage, what is it?
Well, the auto liability coverage protects you that if you're found at fault in an accident and you cause bodily injury to another party, your liability limits on your auto policy will help pay that claim.
And are there minimums?
Yeah, here in California, the auto liability coverage minimums are $15,000 per person, $30,000 for accident, and then $5,000 for damage to property.
Do you think that's enough?
No.
How much
Absolutely
do you recommend?
not. With our clients, we're recommending $250,000 per person, $500,000 per accident, and at least $100,000 for property damage. We also encourage folks to purchase a combined single limit of liability at $500,000.
Can you tell me a little bit about the difference between the $100,000 for the combined single limit of $500,000? What does that mean?
Right. So basically, with single limit coverage, you're going to have a per person limit, you're going to have a per accident limit, and a property damage limit. With combined single limits, that $500,000 will cover all those areas, but there won't be a per item limit.
Great, thanks. So the second part of a standard automobile policy is the comprehensive and collision coverage. What is that?
So basically, the collision coverage is any damage to your vehicle with a collision with another object or an upset. And then the collision coverage is everything that isn't covered on the comprehensive. So, the comprehensive coverage will cover full glass. It will cover if you hit an animal. It also covers for theft and vandalism.
Okay. And how much of this one do you need?
Well, basically, you're going to need to have the coverage on the car to protect the value of the vehicle. So the level of deductibles that you should set should be anywhere between $500 or $1,000.
Okay. Is there much of a savings with the deductibles? Is it a needle mover?
Well, there can be. It depends on how many vehicles in the household, what type of vehicle, the replacement cost of the car. The best thing to do is review each car and the deductibles used and make sure it fits your risk tolerance.
So for the third part of a standard policy, underinsured and uninsured motorist coverage, What is that?
So really you want to have that coverage because, as I mentioned before, the limits in California are $15,000 per person, $30,000 per accident. With uninsured and underinsured motorist coverage, you protect yourself so that if you are in a accident with an uninsured or underinsured driver, your policy will pick up to fill the gap in coverage.
Okay. And how much of that do I need?
That limit should match your liability limits on your auto policy.
Okay. So Jill, in your 14 years, you've looked at a lot of
Yes.
claims and had a lot of policies. So in addition to what's on the standard policy, those three areas that Jill has just gone through with us, what else do you recommend?
Well, I would look for full glass coverage. That allows you to not have to file a claim under your comprehensive coverage. That full glass coverage will cover all your windshields and auto glass with $0 and zero deductible. So that's always a good feature to have.
Is that a common one for people that need?
Yeah, especially here in the city, driving around San Francisco in the Bay Area, you get a lot of those rocks up on your windshield. So it's good to kind of have that full glass coverage. It can be very expensive.
Okay. And agreed coverage, what's that?
Basically, that's agreed value for your vehicle. It's also known as lease gap coverage. dealerships will sometimes try to sell you that because your car depreciates as you drive it off the lot. So it's good to go ahead and agree the value of your vehicle each year before your policy term starts. That way, at the time of settlement of the claim, you'll just be issued a check for the value of the vehicle.
All right. And rental car reimbursement, do I really need that one?
Yes, if you rely on your car to get back and forth and do your daily activities, this rental car coverage will help you be able to rent a car while your car's in the shop being repaired for a covered loss.
Okay. And this last one, choice of repair shop and original equipment manufacturer parts.
Right. So most of us have people that we work with, either a repair shop or a mechanic that we prefer to take it to, so you always want to have that choice. And also you want to make sure that the company's required to replace your vehicle with original manufacturer parts.
So I could get like a Lamborghini light in my car?
It depends on what kind of car you have. But the choice is you just want to make sure, one, you have a choice, and one, you can always get the original manufacturer parts. This becomes really important if you drive a BMW or a higher end, like Mercedes, those type of cars.
Is this actually a problem? Did they do this?
Yeah.
Can you give me an example?
I can't give you a perfect example, but basically I've seen claims where parts of the car have been replaced with lesser value vehicles.
And painted over.
Painted over, and yes, exactly.
Don't look so good. So
yeah.
Worth having. All right. So before we move on from auto insurance, can you give us an example of a story of an interesting claim that you've been able to help someone with?
Well, I think probably one of the biggest common auto insurance claims is a client will be in a hurry, pull out of their driveway, hit either a mailbox post or something in the road, and usually they'll be found at fault. And I really encourage them to call me first so we can discuss whether it makes sense making a claim, how much damage there is, those type of things. So
like if the mailbox leaps out a lot in my driveway, maybe I should talk to you first.
Yeah, we should. Figure out how many claims we're going to file for that crazy mailbox. Yes.
All right. So moving on to the second part of property and casualty insurance that we'll be talking about today, homeowners insurance. Jill, why do I need it?
Well, homeowners insurance gives you financial protection if there's ever any damage to your home or its contents.
Okay. And what's covered in a standard policy?
So the perils that are covered in a standard homeowners policy are fire, windstorms, hail, lightning, vandalism, theft. Typically, earthquakes and flood are not included on a typical homeowners insurance policy, but it's important to note that if you do have these types of risk exposures, you can purchase supplemental insurance policy to make sure you're covered properly. And then
on a standard policy, when you get the declaration page that tells you the price and the cost of all the different components, the standard components, those who are watching us will see listed on the screen. Can you walk us through that? So dwelling coverage, what is that?
So really that's the limit of coverage that's going to be available to rebuild your home.
Okay, and how much do you need?
Well, currently in San Francisco, we're looking at rebuilding costs can be anywhere between $350 and $400 a square foot for standard construction. If you have higher end construction, you might want to take a look at increasing those limits, but it's really important that you review it with your insurance agent to make sure you have the proper coverage.
Okay, so I don't need to figure this out on my own?
No, you should always talk to someone.
Okay, and other structures, what's covered there?
So basically other structures is coverage for structures on the property that are not attached to the primary home. So this is common as fences, sheds, pool houses, things like that.
In the garage if it's not
attached, yes.
Okay, and personal property?
Well, and with personal property, clients usually have a difficult time coming up with just a limit off the top of their head. So there is a website available that's, I have it listed here, it's www.knowyourstuff.org. Now that'll help clients basically put together an inventory. It actually allows you to store photos there too of personal items that you want to make sure you have a record of. You can also file it all by category or by individual room. So it's just a really easy way to make sure you have everything covered properly.
And personal property is not one of those bits of terminology that means a whole lot to me. So can you tell me what personal property really is?
Well, really the easiest way to think about it is if you were superhuman or Superman, for example, and you could pick up your house and shake it, and everything that fell out of it would be considered the personal property. So it's not attached to the home. So certain policies will get that number will just be a percentage of the dwelling coverage. Sometimes it could be 70%, sometimes it could be 75% of the dwelling coverage. Other carriers will allow you to really customize that coverage so you make sure you're covered properly, but then you're also saving premium dollars.
Okay. So, for example, if I own a home in San Francisco where property values are very high,
Right.
and the policy has a standard of 70% of my dwelling coverage, I may have insurance for a lot of personal property. I may just not have that many clothes,
Right.
shoes, and couches, and so forth.
Exactly.
And so I can save money there.
Yeah.
That's a
So
great tip.
some carriers will allow you to go ahead and manipulate that number to have it better fit your plan. Some will just say no, you have to go with the 70 or 75%.
Got it. Loss of use. What is that?
So that coverage limits available is that if there's a covered loss in your home and you can't live there, that loss of use policy or policy feature will allow you to have a pool of money to go on with your standard of living while your home's being restored.
Okay. And liability insurance.
Right, so again, liability insurance, just like on the auto, what the liability here is going to protect you for is if people come on your property, trip and fall, say you were negligent in any way, that's where that liability coverage comes in.
Okay. And in addition to what's on the standard policy, there are some recommended features that Jill has pointed out from her experience as being useful. So let's talk about some of those. Extended replacement cost. What's that?
Right, so at the time of loss, if it costs more to rebuild your home than the limit we have on the policy, you want to make sure there's an extended replacement cost feature built into the policy so you get an extra percentage so that if at the time of loss it costs more to rebuild your home, you have that pool of money available.
Got it. And cash settlement?
Yeah, this is an important feature as well. Some folks, if something does happen in your home, if there's a total loss, they may not want to rebuild there. Some carriers will require you to build there, but there are some carriers that will offer you a cash settlement option, which will allow you to simply take the value of the policy, go purchase a home elsewhere, and then sell the land and be able to become whole again that way.
And that can be really valuable to
Some people, yeah, it depends on where they're.
what you want. Home appraisal service. What's this one?
So some carriers offer a home appraisal service as part of it's complimentary as part of insuring the home to value. So what they'll do is they'll come out, they'll take photos of the exterior and interior home, measure for square footage, and then that way we have a permanent record of exactly the type of construction features of your home as well as some of your personal property.
For me, that is one of the big bonus ones because that's torturous to me to go around with a camera and document everything and so forth. I think
Right.
that would be incredibly helpful. Replacement cost coverage. Tell us about that.
Right. So again, you want to make sure that the home, if there's a claim on the home, you actually have replacement cost coverage. So if at the time of loss, say for example, it's an area where there's been several homes lost and it would cost, all of a sudden the construction costs to rebuild are going up. You want to make sure that you have enough coverage there with that replacement cost so you're made whole again.
All right, so I came home from work and there was a waterfall outside my front door and I looked up and there was a tree that had fallen on my roof and then I
Right.
went inside and went around the broken stuff and the whole back half of the house was charred. It was
Right.
bad. How do I make a claim?
Well, the first thing you do is you need to make a phone call, and that's either to your actual insurance broker, if you're working with a brokerage firm, or to your actual carrier, if you're working with a direct writer such as a State Farm, Allstate, Geico, that type of thing. But yeah, the first thing to do is make a phone call. If it's a theft or vandalism claim, the next call needs to be to the police department because you're going to have to make a grievance there as well so they can follow up on it.
What do I have to have ready with that phone call? Anything?
Well, yeah, they're going to ask you for a statement of what happened. So, kind of gather your thoughts before you make that phone call, and it's just the facts of what you walked into.
All right. All right. Before we move on to umbrella insurance, can you give me an example of something a little unexpected, perhaps, that you were able to help a client with?
on the homeowners.
On the homeowners.
Yeah. So probably one of the most common claims is if I have a client who's out doing gardening work, always working on trying to beautify the home. They leave a garden hose out across the sidewalk on the walkway up to the house.
That never happens to me.
Yeah. Someone trips and falls on it and accuses the client of being negligent, and then there could be a lawsuit there too. So it's just being, you can protect yourself by just making sure you clean that kind of stuff up so it's not left there for a possible claim.
But if you forget,
Yeah.
homeowners insurance is good to have.
That's where your liability coverage will come in, yes.
There you go. We have a question here. Let's stop for that. The question is, I had a burst water pipe under my tiles. the insurer told me it was not covered. Is that normally the case on homeowners policies?
Right. Well, that can be pretty. It's it's definitely something you should work with a broker on to discuss, because if it's determined that the pipe, it was faulty construction, it's not going to be covered. If there was an actual cause of loss, and remember that a cause of loss on a homeowner's policy has to be lightning, fire. So if there's actually a covered loss, then yes, it would be covered. But if it's not, and it was just faulty construction or burst pipe, then it wouldn't be covered. So you have to definitely look through your policy for that one.
All right. So no more questions at this time, so we'll go on to the third part of the property and casualty insurance that we're covering, which is umbrella insurance, also known as personal excess liability insurance. Jill, what is personal excess liability insurance?
Well, it's basically an additional layer of liability coverage that would sit on top of your underlying exposure. So in this case, what we're talking about today would be to cover above and beyond on your auto policy or your homeowner's policy. Also another would be watercraft, for example. You want that list there too. So you'd have the underlying coverage on your individual policies, and then the umbrella coverage would be a second additional layer to protect your assets on top of that.
Hence the name umbrella insurance.
Yes.
And the key components of umbrella insurance policy, the first one, property damage and bodily injury. Tell us about that.
Yeah, so basically if you're, like I said, if you have umbrella coverage and you're found at fault for any property damage or bodily injury to another person, that's where your umbrella coverage would also, the liability coverage would kick in. Also, if you're cause personal injury to another person, this has happened lately on blogs, social media. If you're saying anything slanderous or libel about any other individual, you could be sued for that. So that's what the umbrella policy is there to pay for any claim for that reason. The defense costs, even if you're sued for an erroneous lawsuit, the defense costs should be outside the limit, so that at the settlement of a claim, the defense costs are paid, and then there's also still the availability of the limit to pay for the actual loss.
And that's something that is attractive about excess liability insurance, is that the defense costs are paid by the insurance company, not by you.
Right, exactly.
And the excess uninsured and underinsured motorist protection.
Yeah, some carriers will allow you to add another layer of that excess uninsured that we talked about before onto your umbrella policy as well. And just to kind of give you an idea, to have that extra coverage is about $125 a year, and it's worth it to add that limit.
So, and this is one of the big questions, and we talk about this a lot with clients. How much do I need?
Right. So there's really no magic formula about how much you need. It's really it's individually based. It's really about where the risk exposures are and what assets are at risk. So depending if you're working with a financial planner, it depends how these assets are titled. But there's also, we really need to talk to the client to actually figure out where their risks are. So for example, if you have a family who's driving, kids back and forth to soccer camps, they're having birthday parties at the home, there's a pool, obviously their risk exposures are more than
driver.
Right. So obviously the risk exposures are different than just the two married folks with no kids. So the exposures are different. Right.
All right. So actually, before we move on from this one, can you give me an example of a claim that you were able to help a client with?
Well, yeah. So I actually had a really interesting one earlier this year, where a client of mine had a tenant for 13 years in a additional home she owned. The tenant moved out, they had a great relationship, everything was fine, and all of a sudden my client was sued because during that time that person was there as a tenant, they invited someone over who had a small child that fell down the steps. And before my client knew it, she was served papers that said she was being sued for being negligent by having that renter in there and these faulty steps. So even though the claim really didn't have any merit, it was a year-long settlement of that, and also the defense costs came into play, and the policy actually responded and paid for the defense costs.
Good. I seem to recall you telling me a story about, was it Aspen?
Yes.
Did you tell that story? That's a good one.
Well, I also had a client who had a claim last winter at a home in Aspen, and basically, mudslides aren't covered on your homeowner's policy. So I had a client who, in Aspen's gorgeous area, and up on the other hillside there was a large boulder, and when the ground was no longer frozen in the spring, that boulder came loose, and it came down the hillside right into my client's home through the entire thing. It's almost like The only way I could describe it, it was like a Bugs Bunny cartoon. If you ever recall the,
So it was an Acme boulder.
Yes, yeah, right, exactly. So we went back and forth with the insurance company, fought it quite a bit, whether it was a falling object or whether it was going to be the mudslide, and we actually got them to pay the claim. So it was a victory for us, but it was a tough one.
Excellent. All right, so now there's no questions for this section. So now we're going to play a game, and this game is called What Insurance Do I Wish I Had If One of These Modern Day Occurrences Happens to Me? So, Jill, I'm driving a carpool for kids, and I get into an accident. What insurance do I wish I had?
Well, like I said, you wish you had adequate liability limits on your auto policy for one. And like I said, in a case where it's a carpool, really that combined single limit of coverage where you don't have a per person or you don't have a per occurrence limit will actually be more beneficial for you.
Okay, because I'm responsible
Right.
as the bad driver.
Right.
Okay. My kid goes to college and they say horrible things on Facebook and gets sued. What insurance do I wish I had?
Well, you hope that your child is still covered on your homeowners policy for the underlying liability coverage that we talked about for personal injury. But then also you want to make sure that they're also still named insured on your umbrella coverage as well, in case the claim does go above and beyond that initial $500,000.
So you're saying when my children grow up to college, I don't want to just get them right off the policies to save money?
No. You do not want to do that, especially if you're still claiming them as a dependent.
All right. So my kid is in a car driven by someone else who gets in an accident. What insurance do I wish I had?
Again, you wish you had adequate underinsured motorist coverage because the insurance always follows the vehicle. So you can't control what other limits folks are going to carry on their car. Like I said, in California, you only need to have $15,000 per person, $30,000 per accident. So it's always good to have that uninsured motorist coverage to fill in any gaps if you're put in that situation.
All right. A fire comes through, wipes out my whole neighborhood, and the contractor's fees are through the roofs because they have their choice of homes to build,
Right.
and I want mine to get in line. So what insurance do I wish I had?
Well, like I said before, you want to make sure your policy has that extended replacement cost feature. And then to really know what that means, like what percentage of the limit that actually will cover. The cover enhancement become very important if there's a sudden spike in construction costs that could push rebuilding costs higher than expected and higher than your policy limit.
It's Halloween, and I live on one of those streets where they busing kids. And Spider-Man slips in the front stairs while chasing a little Batman. What insurance do I wish I had?
Well, you want to make sure you have adequate liability on your home or renter's policies. Standard policies also cover a non-fault medical coverage. We didn't really go into that today, but I'd be happy to explain to folks who are interested. Basically, what that does is that the injured guest is taken care of, but then it avoids a lawsuit on your liability portion. So that's, you want to make sure the policy covers you either way, either on the liability or the medical for that. And not everyone's familiar with the coverage, so it's good to kind of review that stuff as well.
Okay. My husband and I bought a house 30 years ago, and the kids have finally moved up and out at the age of 45, 50, and now we've remodeled the kitchen and bathrooms. We have granite, double pane windows, skylights, the works. Do I need to call my insurance agent?
Yes. It's important to review your insured limits on your policy to make sure that it includes the cost of the renovation you just completed. If you're with a carrier that offers the free appraisal service, that would be a time where your broker would order them to go out to the house and do another appraisal. On average, we recommend that you have a new appraisal done on the home every 6 years.
What if I buy a tenant in common unit with my boyfriend or girlfriend in San Francisco, for example? What insurance do I need?
So TICs can be pretty complicated. So it really depends on how it's set up. What you really have to make sure you're note of is that all owners of the property are named insured. Now, whether that's on a TIC common policy or on each individual owner's policy, you just want to make sure everyone's they're named insured on there, so it's properly covered.
What does a named insured mean?
Basically, you're named on the policy. So the policy will be in your names. That way, if there's ever a claim against you, you're named insured on the policy.
My son's preschool asked me to be on the board on the audit committee. What insurance do I wish I had?
Well, you wish that any board that you serve on has at least $1 million worth of what we call directors and officers coverage. directors and officers can get sued for a variety of things. It could be fiduciary duty breaches. It could be a failure to fulfill an organization's mission. It could be a misuse of director funds. Basically, any improper conduct of volunteers or employees, you could also fall back on directors and officers. So you really want to make sure that the board you're serving on has at least $1 million coverage, and there's actually, you can purchase additional limits if you need to.
Are you casting aspersions on my auditing skills, Jill, here?
Everyone always goes in with the best intentions, and sometimes things don't work out that way.
Right.
Yeah.
I finally went out and got my estate documents prepared. I put my house in the trust, and my financial planner is very happy with me. So
that's good.
I need to call my insurance broker.
Yes, anytime you make corrections or additions, revisions to your trust, you need to call your insurance person as well, because the trust needs to be named as additional insured on your homeowner's policy.
And what does it mean to have a named as an additional insured?
Well, like I said, named insured on the policy is you, but when you title your home in your trust, then the trust needs to be a named insured as well.
Got it. So you don't want to have a loophole there.
Right.
All right. I really like pink mustaches, and I think I might want to work in my free time for Lyft or Uber, providing taxi service for people and driving my own car because I like it. It's got the whole couch thing going on. It's got a cup holder. I like it. Will my personal auto policy cover me?
It will not if you're acting in the capacity of a driver for any of those organizations. Currently, they hold commercial insurance policies with $1 million of coverage per incident. The driver's liability to third parties is covered from the moment a driver accepts a trip to its conclusion. If you're not acting in that capacity, then your personal auto policy comes into play. But it's important to note that those entities do have commercial general liability coverage to cover you.
That's good to know. It's been in the news a lot, so it's nice to have some clarification there.
Right.
When I rent a car at the airport, they keep advising me to get insurance, and they don't want to let it go. Do I really need it?
Honestly, it really depends on what auto insurance carrier you're with. Some extend auto policy to a rental car with no changes, and while others limit the coverage when you're renting a car. So, and also when you rent a car, some credit cards will cover through your credit card benefits. So the best thing is to do is just to review your insurance policies and your credit card benefits, and then it's very important to read the fine print on that.
It's always important to read the fine print. I think they should do away with the fine print, make it bigger. All right. I was out for dinner last night with my fiance, and I looked down at my engagement ring, and the stone was missing. What insurance do I wish I had?
You wish your ring was scheduled on a collections or a personal articles policy. These policies can be purchased separately. There's no deductible, and it insures against the many risks, including the stone falling out, but also make sure your piece is valued at the correct value and insured the right way.
My dear sweet husband went out and bought a boat. What insurance do I need?
Well, first, you wish you had watercraft coverage. That'll cover the hull of the boat, and then actually it will also have liability limits on the watercraft policy. But then also you want to make sure that your watercraft is listed on your umbrella coverage as well, and that all regular operators are named on the policy too.
I came home from work last night to find a bunch of college kids had broken into my apartment, drank all my beer, and stole my computer, my grandmother's ring, and my passport. What insurance do I wish I had?
You wish you had renter's insurance coverage and an insurance carrier that settles claims on a replacement cost basis and not an actual cash value basis, because that will take into depreciation, and you want to make sure you're made whole when things are stolen like that.
So replacement cost basis means that it's. Tell me more about that.
All right, so replacement cost is basically you're going to be reimbursed for what it costs to replace an item, not what it's worth today after it's been depreciated.
So you're saying that even though I think my computer is worth $2,000 with the actual replacement cost, or I'll get the $2,000, but if it's the
actual cash value, they'll take into
it'll be like $20.
Yeah, no, it wouldn't be that bad, but yeah, they'll take into how long you've owned it and that type of thing.
So it's important to know the nomenclature on your policies, as you can see here.
Exactly.
All right, and because my passport was stolen by the college students, I'm now a victim of identity theft. So what insurance do I wish I had?
So most insurance policies now will offer identity fraud expense coverage. Now, either that's coming standard in the policy or you need to add it on as an endorsement. And it's important to note that actually doesn't provide a pool of money to pay for whatever money was taken, for example. But it's really there to help you recoup. Basically, it'll cover your employer documented loss of wages for work, time to meet with attorneys, loan application fees for loans you were rejected because of the credit fraud, the cost for notarizing appropriate documents to get your credit back up and running, and related long-distance calls to merchants, law enforcement agencies, creditors. So basically, it's a pool of money available to get you back up and running with your credit again prior to this incident happening. So
that maybe the little less insult is added to injury there.
Yes.
That is the end of our lightning round here, and I see there are some questions that some of you have written in, so let me take a scan here. Here we go. If I were bitten by a dog, I can make a claim against can I make a claim against the homeowner's insurance?
Yeah, so actually the liability there would be the person's dog that bit you. So yeah, you can make a claim, but it would be against their policy.
Okay. And my neighbor flooded my home because he neglected his drainage system next to my house. Would he normally be covered by his insurance?
That's a tough one too. It depends on what's in the policy. If there's backup of sewer and drains coverage, who's found at fault. That can be a little tricky. So I'd be happy to talk offline about it because it can get pretty intense. But there's ways to settle a claim around that kind of stuff.
Got it. If you have other questions, you can put them in now. Other than that, is there anything that we haven't covered today, Jill, that you wanted to make sure we got that you said?
I think really the most important thing is to make sure your insurance planning is part of the rest of your financial planning. Don't just let it continue to renew every year. Look at it each time it comes in. Talk to your broker or anyone at the agency you're working with just to make sure there's not any new policy features you may be missing out or additional risk exposures that you're not covered for.
Okay. Well, Jill and I are both fast talkers, as you may have realized going through this. So that is it for our material today. So I would like to say thank you to Jill. Thank you, Jill.
Thank you, Liz.
Jill is Vice President at MOC Insurance, one of the largest independent insurance brokers in California. I'm Liz Revenko, Financial Planner at Mosaic Financial Partners. We at Mosaic Financial Partners would like to leave you with this. We want you to have a financial plan done right. And part of that is evaluating your risk exposure. We want to make sure you, your family, and your future are protected against risks in the way that makes sense for you. Thank you all for joining us today. A recording of this webinar will be available on our website, www.mosaicfp.com/events. And again, there you can find information about upcoming webinars and other events that we sponsor. You can also follow us on Twitter, LinkedIn, or Facebook. Thank you and have a great afternoon.